Hi, I'm Tom Lydon, editor of ETF Trends here in Washington, D.C. at the Charles Schwab Impact Conference. And I'm here with Luke Oliver, Director of Deutsche Asset and Wealth Management. Luke, thanks for coming by.
Thanks for having me.
Listen, you guys have been doing some real exciting things in the ETF space. And just recently, you launched a China A-share product. Now, China ETFs have been pretty popular. But China A-shares, you're really getting in on the ground floor. Explain how that was put together and why that might be an advantage over a conventional China ETF that we see.
Well, China has been a relatively closed market, and for that reason, all the ETFs that have been structured have always used some form of derivative, whether it's a future, a swap, or even the cross listings in Hong Kong, the H shares.
Right.
So what we've done differently is built a groundbreaking product that gets you access to true China A shares. And we do that through our strategic relationship with Harvest Global Investments, which is a local onshore asset manager.
So they're actually right there, able to trade on the exchanges on your behalf, is that right?
Yeah. I mean, the way it works is DB's actually got a very deep, very good relationship with Harvest. Deutsche Bank is actually one of the partners in the joint venture that owns Harvest Group,
right?
Who in turn owns Harvest Global Investors,
okay,
who are the sub-advisor.
I see the connection, and the idea, most importantly, is rather than buying derivatives, you're really getting the shares, and the A shares and B shares really don't always correlate. Is that right?
Right, and the real key to that relationship that we have is that we're able, through Harvest, access an RQ fee, which is the renminbi qualified foreign institutional investor quota system that allows you direct access to that local market.
Because that really has been the huge block
Yep.
to foreign investors in the past, and still is that there? For example, if I wanted to go over myself
Yep.
and buy in the A shares market, I'd be out of luck. Right?
I'd recommend you buy our A-share product, but there's certainly, I would say that in the future there will probably be more opportunities for people to do that than there are now, and we're one of the first people. We are the first person to bring out an ETF in the US that does that. I think in the future we'll see more people getting access, and why that's a good thing is that you can get in on the ground floor with our product, invest in China now, and as that market opens up and more capital flows go into that market, it could be a really good investment.
Talk about liquidity. Any liquidity concerns there?
No, the way we've structured this, it looks just like a US ETF, and it is a US ETF. It trades on the New York Stock Exchange. It has a full set of market makers and authorized participants, like all of our US funds. So from that respect, it is just like every other ETF out there. Where it's different is how we move the flows from the US via Hong Kong into onshore China, and that's the difference. From a liquidity perspective, we seeded it with $108 million, which is, I think, a record in recent years for a new product to seed.
Yeah.
And we've seen one of the best ETF starts I've seen in terms of volumes.
That's awesome. Well, I know you've been very innovative. We follow very closely what you're doing in the overseas, especially Europe markets, with your hedge currency products. Congratulations there.
Thank you very much.
And now, A-shares, ticker symbol one more time?
ASHR.
All right, there you go.
Pretty simple.
Okay. Look, thanks so much for being with us today.
Thanks very much.